Honorable Finance Minister, Shrimati Nirmala Sitaraman, to reply the discussion.
So let me first thank you for coming over to be here as a part of this discussion and lead it from the chair, despite and unmindful of your requirement of rest and so on. I'm indeed grateful for your presence.
Health and economy sometimes suffer similar challenges.
Thank you.
We have to rise to the occasion.
Sir, I'm indeed grateful that 24 members of this House have participated in this debate. And I'd like to start from saying that in 23-24 budget, I had mentioned that to improve, I quote, to improve bank governance and enhance investor protection, certain amendments to the Banking Regulation Act, the Banking Companies Act, and the Reserve Bank of India are proposed. That was in the 2024 budget. And we are actually having taken a bit of time between the two houses and also before presenting it to the Lok Sabha. We had worked on this banking amendment bill, which is unique at the same time significant in some few ways. This is an amendment bill which is coming in, which is on 8 different themes. I spoke about protection of bank account holders' interests and also simplification and so on. This particular banking laws amendment bill, sir, will have an impact on 5 different acts. It's unique in that sense, and it's unique that 8 different themes of amendments, meaning amendments for one particular theme, and amendment for another particular thing, and so on. 8 different themes are being covered to attain the purpose which was stated in the budget speech. 19 sections in these 5 acts will be touched, and therefore I want to first of all say there are 5 acts: the Reserve Bank of India Act 1934, Banking Regulation Act 1949, State Bank of India Act 1955, the Banking Companies Acquisition and Transfer of Undertaking Act of 1970, and the Banking Companies Acquisition and Transfer of Undertaking Act 1978. These are the 5 acts on which the proposed amendments will have an impact, and they spread on 8 different reasons as to why we are doing these. Before I get to specifics of what are these amendments, I want to just place it for the record and also to recall the members from their memory that from 2014, when our banks were under severe stress which were built up, excessive stress which was built up over several years, particularly on the loan portfolios, had reached a situation of crisis, and our economy anyway had reached the fragile 5 position. So, in order to address the major banking crisis-related matters, reforms were undertaken. We implemented the Enhanced Access and Service Excellence, short acronym being EASE, Enhanced Access and Service Excellence. EASE was brought in the banks. We enacted the Insolvency and Bankruptcy Code in 2016. We also put in place a very robust banking governance framework. We set up the National Asset Reconstruction Company, the NARCL, and then we also undertook amalgamation of public sector banks, and these are few of those significant steps taken to restore banks to good health. So the gross NPAs, the outcomes are really there for all of us to see. The gross NPAs of scheduled commercial banks were at a multi-year low of 2.5% in September 2024. So those measures began from 2014, and today, when we are in 2024, September 24, some months ago, the multi-year low level of gross NPA of 2.5% has already been reached. System-level capital to risk-weighted asset ratio, which is known as CRAR, of 16.7% in September 2024 was also achieved, and it is well above the regulatory minimum level. Meaning, if we had reached a certain level, that would have been sufficient. We improved on it and have bettered it. So the steps taken under the leadership of the Prime Minister in getting the banks to some kind of good health are showing results across various indicators which measure the health of the banks. Public sector banks have also recorded the highest ever net profit of 1.41 lakh crores in the previous financial year. And if that is the level at which they had achieved profitability in the net profitability in the previous year, I'm confident that this coming year also India's banks will attain even greater heights. Sir, even though the NPAs have reduced drastically, the government has remained absolutely committed to taking stringent recovery action against willful defaulters. The debate saw very many members speaking about willful defaulters going away from the country. Fugitive offenders have also, economic offenders have also left the country. What are we doing about it? I would give a brief remark now, but I'll get into specifics when I address the specific members who spoke about it. I have stated in this House several times that the write-offs don't mean a wave off by banks. I repeat that line, but then I'll elaborate on what it means actually. Write-offs do not result in waiver of liabilities of borrowers, and therefore it does not benefit the borrower. So it's not as if we waived off or the written off is actually waive off, resulting in benefiting those huge defaulters. Sir, close to the end of the debate, we saw member Ravi Chandra Vadiraju, who spoke in Telugu, and I'm grateful for one line that he said. He said, under his government, till recently, which was ruling in Telangana, they have taken a lot of steps towards giving relief to the farmers. Rina Maafi, as it's known there. And Rina Maafi actually under their government had been very effective, and that they have taken care of farmers who were under severe indebtedness. And in that, I'm glad he observed, I'm not commenting on anything to do with the Rina Maafi of the TRS regime, as we would call it, the BRS regime. I'm not commenting. But one line that he mentioned, as different from the Congress's time when waiver was announced, Rina Maafi was announced, but actually half the farmers did not even get it, is an observation, if I understood his Telugu right. Did you say that, sir? So that is the point which all of us have been repeatedly saying. Announce Rina Maafi or loan waiver, but you really don't do it. Half the farmers are left without Rina Maafi, and the banks would put it on the record saying you've been covered under Rina Maafi because the Congress government had given that promise, and later, because under a one-time settlement your loans have been written off, the farmer is not even eligible for one more new loan. So instead of serving the farmers, the Congress's notorious 2008, by which we were told through the media that they won election and came back in 2009, that notorious Rina Maafi had left many farmers neither here nor there. They were not sure whether they got the Rina Maafi, and if indeed the Maafi was given, are they eligible to go ahead? No. You have a layer of small farmers looking up to the banks to give them some kind of a relief. So I want to highlight, like the way they speak about food security, like the way they speak about the Manrega in the rural areas, all schemes brought by them, none of which were effectively implemented. And when Prime Minister Modi implements them without corruption, without malpractice, and without any kind of wrongdoing, they would say, oh, that's our scheme. Yes, it was your scheme, but you kept it in paper or you mismanaged it. I've heard honourable members say, as different from the way Congress has given Rinamafi, our Rinamafi is better. I would want to highlight the fact that deceiving the farmers is for nobody's good. If you really want to help the farmers, here is Prime Minister Modi putting 2,000 rupees every time, annually 6,000 rupees into their account through the transparent DBT. Actually, it helps the small farmers. Show it in action, but don't put it in as though it's a right which we've given to the farmers, and end of the day, farmers don't feel that the right has been given actually to them. So I was very glad to hear that member. I've gone much ahead. I would have spoken when I'm responding to him. But that is the way Congress's policies, which have all been big-time talk, no action in the ground. And if there's action, it's ridden with corruption. Non-existing individuals get the waiver, get the benefit. Others who deserve don't get it. So that is something which thankfully, there's another party member who's saying it, not me. Sir, so the public sector banks have recorded the highest ever net profit of 1.41 lakh crores in the last year. I'm sure they will do it this year as well. So I want to highlight the fact, most often they say fugitives, they've ran away with public money, small people are being harassed. No, small people should not be harassed. We are periodically through the Reserve Bank of India telling banks, telling our NBFCs that you have no business to go and harass anybody. Duly, yes, follow it up, but you can't threaten people or get into their house at ungodly hours and threaten them and so on. But with all that said, the rich borrowers are let to go off, they run away from the country. I want to give you this number, sir, which we placed in this house during question hours also several times. The Enforcement Directorate has successfully restored properties valued at approximately 22,280 crores to victims or legitimate claimants where ED has enforced its action and taken away from the accused or those who are charged with this offence with the court's permission and restored properties to the legitimate claimants. So, for those of us who seem to think, oh, ED is let loose, they are going on a political vendetta. No, people's money is being given back. People's properties are being given back. This work is also being done by ED, and I want the honourable members to recognise that. And when we say money is being taken away, only big people are running away, small people are being suffered, 22,280 crores, legitimately through the process, getting the stamp from the court, is being sent to the due claimants. So that work is got to be recognized. Sir, further, we'll also be focusing on a lot of structural reforms, but our efforts are not restricted only to that. We have deepened financial inclusion, took banking to the last citizen, and ensured that citizen-centric banking is importantly served as an interface. Quite a few members, and the last speaker, Sanjay Jaji, also spoke. 55 crore Jan-Dhan accounts have been opened, of which over 55% of them are women, and 66% have been in rural or semi-urban centered bank branches. Sir, Global Partnership for Financial Inclusion, in its Financial Inclusion Action Plan report, which was published in 2023, says, I quote, by leveraging DPIs, digital public infrastructure that is, by leveraging DPIs, India has achieved over 80% bank account penetration, a journey that would have otherwise taken 47 years through traditional means, unquote. So this is a report which has been published somewhere else. They recognize the financial inclusion using DPI, and that actually is something which they have measured. Otherwise, if you followed the traditional methods of inclusion, I heard Honourable Member Shakti Singh Gohil talk about how the intention of nationalisation of banks was to reach the poorest of the poor, give them the financial inclusion. Well taken, sir. But our grievance, as I said, in every one of the acts which they claim, it's ours. Rightfully, they are theirs. They introduced it. But in 47 years, what would have been otherwise achieved has been achieved through DPI in these 10 years. And that is why, since the nationalization, although it was intended to take bank to the poorest of the poor, the results were not much to talk about. So that has to be recognized. So numerous steps have been taken for financial inclusion and does not stop with merely banking the unbanked, and instead enables meaningful engagement with financial services. So this has been achieved primarily because there are two pillars of funding the unfunded and securing the unsecured. When I say funding the unfunded, 68 lakh street vendors have been supported by PM Swanidhi. There are more than 94 lakh PM Swanidhi loan accounts because there are 68 lakh street vendors who are supported by the scheme. But when it shows that people have graduated from the lower end of the loan, repaid it, and graduated to be eligible for the upper end, and therefore they have benefited even from that. So 68 lakh street vendors, but 94 lakh Swanidhi loan accounts have been recorded, and in all the three tranches, 10,000 the first tranche, 20,000 the second tranche, and 50,000 the third tranche. Second point, sir, on funding the unfunded. 50 crore loan accounts sanctioned under the PM Mudra Yojana. Again, these are unsecured loans but guaranteed by the government. Securing the unsecured, sir. 47 crore enrollments, slightly over 47 crore enrollments have been done accident insurance cover under PM Suraksha Bima Yojana. Over 21.67 crore enrollments have been done for the life insurance cover under PM Jeevan Jyoti Bima Yojana, and over 7 crore subscribers for the Atal Pension Yojana. So inclusion both for funding of the unfunded, securing the unsecured. Both of them have taken place throughout these 10 years, sir. So about this bill, and I said there are 5 different acts which will get impacted. I just want to tell you about those 8 different themes which I said are being undertaken. Many members have spoken about in detail, so I won't highlight too many of it. The current reporting Friday, so every bank reports every Friday, that system has several limitations. So the accuracy and effectiveness of reporting data is affected. Therefore, that is now being changed through one of the amendments so that it can be the last day of the fortnight or month or the quarter, instead of being somewhere in between saying report on a Friday. So that particular amendment will affect 5 different sections of 2 different acts. So that is one of the things. The second theme, sir, is on the interpretation of substantial interest. So we are redefining substantial interest. Currently, it is either 5 lakh rupees or 10% of the paid up capital. We retain the 10% paid up capital. We are not changing that. But 5 lakhs for the substantial interest definition, which was last touched in 1968. So since 68, it remains at 5 lakh. Now we are enhancing it to 2 crores, but retaining the 10% paid up capital for defining what is substantial interest. That's the second section, so the second theme. The third theme is about the tenure of directors, excluding the chairman and the whole-time directors. This is particularly relevant for the cooperative banks. Why do we need to at all do this? In the banks, otherwise, commercial banks, it is 8 years, and we are not doing anything about that. That is being retained. But the current system allows for cooperative banks to have their directors only for 5 years. we want to align that with what is constitutionally provided for those cooperatives, which has not been till now thought through. So the Constitution provides for cooperative banks directors to have a term of 10 years. By limiting it to 5 years, they've actually been denied what Constitution provides them. So we want to now change that and then align it with what the Constitution expects us to do. So that will be 10 years of first 5-year term plus one another 5-year term. So 10 years will be available for them. The next one is about cooperative banks. The RBI's existing rule does not allow in the cooperative banks people to hold more than one position anywhere as director. Technically, the RBI can appoint directors to more than one bank at any particular time. So one person can be appointed in 1 or 2 or 3 banks if the RBI does it exceptionally. But in cooperative banks, the same rule which applies to regular banks also applied, that you can be in one place one time at a time only. Whereas the system through which people get elected in the cooperative movement, here's they first get elected at the lower rung, then they come to the middle rung, and then they come to the state level. So it is inevitable that they will have more than one position. So we have to, from the light of the cooperative movement spirit, recognize that they can be in more than one place. So that amendment is being brought in. This day and age, banks have terrible problem if the nomination is not made, or if it is wrongly made, or if it is made for cash and FDs also, too many names being given and so on. So we've said simultaneous nomination will be permitted for cash and for FDs, whereas for lockers and articles in safe custody, it can be only simultaneous nomination. The option is given. These are already being used in insurance policies and so on. It is easier to handle claims. Otherwise, people who are running after to prove that they are the actual nominees becomes very difficult for them, and therefore this is being brought in. It has a bearing on nearly 4 sections of different acts. So that is the other. The other one is, again, applicability of interpreting managing director and deposit insurance corporation, sir. This is one of the omissions while drafting the previous act, Banking Amendment Act of 2020, in order to make up for what was oversight problem omitted. They are now being brought in. Definition of deposit insurance corporation and definition of managing director. Nothing new is being changed, but what was omitted inadvertently is being brought in. And then the transfer of unclaimed dividend is being brought in here. Currently, sir, it is important for us to recognize that public sector banks have provisions for transferring unclaimed dividends to the Investor Education and Protection Fund. However, there are no provisions for transferring unclaimed shares, bond redemption, interest amounts to the IEPF. So the proposed amendment seeks to include these additional categories, ensuring that the unclaimed shares, bond redemption, interest amounts are also transferred to the IEPF. So that is the 7th, and the 8th is on the auditor remuneration, which is fairly straightforward, sir. I'm not explaining that. So I'll come to individual members who have raised some issues. So Member Shakti Singh Gohil is not here. Of course, he sent me a note saying, sorry,
the honourable member had sought my leave.
Sorry?
The
yes, he's also sent me a little...
Singh Gohil had sought my leave. He had to leave.
Yes, sir.
For some urgency.
I recognize that, sir. He's also sent me a written note.
He sought my leave.
A written note.
Is present.
Yes, sir, I understand that. He sent me a written note saying he won't be around. But I want to just address some of the concerns that he's raised. Sir, willful defaulters is one thing which Mr. Gohil had raised. What action has the government taken in such cases, he said. I just want to highlight a few. As on 29/1/2025, if you look back at the last 5 years, As I said, the Directorate of Enforcement has taken up around 912 cases related to bank frauds, including those pertaining to willful default. In these cases, 44,204 crores of proceeds of crime have been attached, frozen, or seized. So, in 8 cases, assets amounting to 22,276 crore have been restituted to banks or to the legitimate claimants or victims of money laundering. 144 accused persons have been arrested. 239 prosecution complaints, including 66 supplementary PCs, have been filed before special courts. 23 accused persons have been declared proclaimed offenders, and 9 have been convicted under the PMLA, so Prevention of Money Laundering Act. So, under the Fugitive Economic Offenders, about which several members spoke, several action has been taken, sir, who have fled abroad. As of 31st December 2024, 9 individuals have been declared as fugitive economic offenders, and assets worth 749.83 crores have been confiscated. So action is going on relentlessly. We have not let it lie low. Sir, Member Saket Gokhale spoke about several issues. He's here. Sir, I've explained write-offs and waive-offs. I was surprised to hear it back again from Member Gokhale. Borrowers of written-off loans remain liable to repay their dues. They are not let off. Banks continue to pursue recovery action in written-off accounts using various mechanisms. They filed suits in civil courts or debt recovery tribunals. Taking action under the Securitization and Reconstruction of Financial Crimes, Assets and Enforcement of Security, the SURFACE Act, filing cases in the National Company Law Tribunal, NCLT, under the Insolvency and Bankruptcy Codes, negotiated settlements or compromises with borrowers. These are several such steps. Selling non-performing assets to asset reconstruction companies. So the write-off mechanism is an established practice globally and does not absolve the borrower of their liabilities. It enables banks to utilize their resources more effectively, even as they continue the recovery process. So, as a result of these reforms implemented by the government, performance of the public sector banks has significantly improved, and I repeat, the gross NPAs of public sector bank have declined. Gross NPA ratio of public sector bank now stands at 2.85% in December 2024 from the peak gross NPA ratio of 14.58% in March 2018. March 2018 is when you saw all those loans prior to 2014 coming to be recognized as NPAs and action being started from then. That was the peak, and that peak was 14.58%. But today, the gross NPAs are, when I say today, December 2024, 2.85%. Pursuant action is showing itself. Capital adequacy ratio improving to 14.84% in December 2024, and I'm talking on provisional data, from 11.66% in March 2018. That's the high watermark, sir, for an ignominious NPA, but that's the high level it reached. PSBs recorded the highest ever aggregate net profit of 1.41 lakh crore in 23-24 and 1.30 lakh crore up to December 2024. That's only for 3 quarters. So there was also this question about gold loans given by NBFCs. I want to use the RBI data and say gross NPAs in gold loans of scheduled commercial banks and major NBFCs rose by around 18% between March and June 2024. That's the data RBI has given. But it is important to note that the NPA ratio in gold loans still remains low. What is it? it is 0.22%. For gold loans alone, the NPA is 0.22% over the gross NPA of all public sector banks, the gross, which includes all kinds of. The gross NPA is 2.85, and if you were to look at gold loan, it is only 0.222%. Sir, the same thing for NBFCs. 3.5% is the gross NBFCs, all of them, for all types of portfolios. But on the gold loan part of it, the NPA in NBFC is 2.58% only, compared to the 3.5% overall for all portfolios. So both the Reserve Bank of India and the government have taken timely and targeted steps to address the issue, and banks and NBFCs have been directed to strengthen appraisal practices, ensure proper gold valuation, comply with the LTV norms, and take action in case of non-repayment, including gold auctions with due notices. So public sector banks were also to conduct a comprehensive audit of gold loan portfolios to ensure full regulatory compliance. No major lapse has been reported. That's about the gold. Penalty charges for non-maintenance of minimum balance was also an issue which Member Gokhale raised. Sir, this has been said several times in this House. No minimum balance is required for Pradhan Mantri Jan Dhan Yojana accounts. Therefore, no such penalty is charged on 55 crore PM Jan Dhan Yojana accounts for not keeping minimum balance. This issue was also probably raised by Member Raghav Chadda when he spoke. Sir, Honourable Member KRN Rajesh Kumar spoke on a few issues. On the nomination system proposed is confusing. I want to say the current provisions of the BR Act, sir, permits the nomination of only one person for the repayment of depositors' money, articles kept in safe custody and safety lockers, and so on. This particular limitation has led to a lot of confusion and challenges, particularly in cases where both the nominee and the account holder or the locker holder pass away, leaving the assets without any valid nomination. So as a result, banks are sitting not knowing how to handle the situation. Such situations have created significant difficulties for legal heirs as well. So when they're claiming their dues, even they face a lot of difficulty. So in order to address these issues and enhance the service of the banks, this proposed amendment has been brought in. Depositors will still have an option for either successive or simultaneous nomination to be given, whereas for articles of safe custody and safety lockers, only successful nomination will be given, so that there is no confusion. Successive nominations ensure that if the first nominee is not available, the second nominee in line will become operative, maintaining continuity and reducing complication for the legal heirs. So he also raised the issue of the PSL shortfall. It's a clear indication when there is a shortfall in PSL. It means that banks are effectively distributing the priority sector lending, which is their duty. If they haven't done it, then the amount which goes to the NABARD will be more. Whereas if they have fulfilled the conditions and the PSL distribution is happening fine, obviously the amount will be reduced, which comes to the NABARD and, let's say, SIDB. So it actually proves that the banks are achieving the target of 40% PSL, which is a target given to them, and therefore if the money is reducing, it is because they are already using it well. So Member Raghav Chadda, he's also given, I'm sure he sent you a note seeking your indulgence. He's given me a letter saying, sorry, I'm not here for the reply. Oh, yeah, sorry, I didn't notice. So, but I did witness.
And he did not send notice to me, and I don't take cognizance.
Oh, fine.
If someone goes
No, you should have
directly
sent
to
it
the
to the
executive.
chairman. You should have sent it to the chairman first.
So he has created a difficult situation.
Yes,
Sending
sir.
a communication and yet present.
Yes, sir. But because he didn't send it to you, डर के मारे आ गए. Sir, he raised the question of public grievances and grievance redressal.
Honorable Finance
Yes.
Minister. Honorable members, it is now going to be 6 p.m. If the House so agrees, we may sit beyond 6 p.m. today till the disposal of the Banking Laws Amendment Bill 2024. Do I have the leave of the House to extend the sitting beyond 6 p.m. as indicated? Honorable Finance Minister.
Sir, on the grievance redressal, I want to say that there is a multi-layered grievance redressal resolution mechanism. Grievances related to banks and financial institutions can be lodged with the centralized public grievance redressal and monitoring system, the CP Grams portal. As per the guidelines issued, the stipulated time limit for redressal of grievances on CP Grams is 21 days. An appeal mechanism is also available for unsatisfied petitioners, and this with a disposal timeline of 30 days. To further strengthen this institutional framework, the Reserve Bank of India launched in 2021 the Integrated Ombudsman Scheme, combining earlier ombudsman schemes for banks, NBFCs, digital transactions into a single streamlined system. So also, Member Raghav Chadda and Niranjan Bishi had raised this issue of availability of banking infrastructure, particularly in the rural areas. I was amused, sir, if you will allow me a light-hearted exchange. If Member Raghav Chadda doesn't take offense, I would like to say he'd observed the number of fans in the banks, number of fans which are working, the bank and its condition, how many whitewashed, how many not painted. I'm really so satisfied. There are members of parliament who are otherwise very busy with many things international, have found time to go to the rural banks and to look at them, to say there is no fan here, there's no door here, there's no chair here. Raghav Chadda, please do more of this. It will help people within the country, because with your exposure, particularly to the Western world, you can do a lot more here. Please do. So I was very amused, sir.
Honorable
but it was
Finance Minister,
Sir?
you have been very mild. You have been absolutely mild. I have seen changes in Raghav Chadda recently. In several aspects, I don't want to share that with the Finance Minister.
Okay.
That should be okay. Honorable Finance Minister.
Thank you. Sir, banking network in India has actually grown significantly, sir, with 42,511 branches of scheduled commercial banks added till September 24, taking the total number of branches to 1,65,501 as of September 2024. Of these, 85,116 branches belong to the public sector banks. The distribution of these branches as of September 2024 is as follows. 30,539 branches are in metro areas. 55,372 branches are in rural areas. 45,314 branches are in semi-urban areas. And 29,276 branches are in urban areas proper. 99.88% of the 6,01,328 inhabited mapped villages are covered by financial infrastructure, ensuring a banking touchpoint, that is a bank branch itself, brick and mortar, business correspondent, or an India Post Payment Bank center are all within the 5-kilometer radius of these villages. So 6,01,328 villages, inhabited villages, are mapped, and of these 99.88 of them percentage have at least a bank touch point, be it a banking correspondent or a branch. So on cyber security, again, quite a few members asked questions. Raghav Chaddaji asked, Niranjan Bishiji asked. I want to say, sir, I'm sure this information is available. The Indian Cybercrime Coordination Center, I4C, under the Ministry of Home Affairs, serves as a national nodal point for coordinated efforts to tackle cyber crimes, including financial frauds. Cyber Fraud Mitigation Center operates in collaboration with major banks, payment intermediaries, telecom service providers, the law enforcement agencies to address and prevent financial cyber frauds effectively. The National Cybercrime Helpline 1930, operational 24/7 across all states and union territories, has been established to ensure immediate reporting and redressal of financial cyber crimes. The Digital Intelligence Platform, DIP, developed by Department of Telecommunications, ensures real-time coordination among stakeholders, including telecom service providers, financial intermediaries, and law enforcement agencies. Sir, I'm told that there is a Chakshu facility on the Sanchar Sarathi portal, which empowers citizens to report fraudulent communication such as spam calls, phishing attempts, enhancing public vigilance and fraud prevention effort. So, Member Harish Biran, I have just one more, sir. I won't take much of your time. Member Harish Biran said, why separate 5 acts amended in a single legislation? I tried saying that even in my opening statement, sir. But the Banking Laws Amendment Bill, which is now brought in, includes amendments to multiple banking legislations to address interlinked and consequential issues effectively. So instead of going one by one to all these acts, we are doing it at one go because the intent and also the objective are all across the board common. So shifting of submission timelines for statutory reports in both the RBI Act and BR Act is being addressed by the single bill, and transfer of unclaimed dividends, shares and redemption is also the other one, which touches on 3 acts. So addressing all of these in one bill ensures consistency, avoids duplication, and also achieves a cohesive regulatory framework for the entire banking sector, and that's the reason why we have taken up this route. So the last one which I would like to take up is Member Sivadasan has spoken about quite a few issues, particularly about the bank employees. I'd like to say, sir, the IBA, the Interbank Association, signed the 12th bipartite or the 9th joint note on 8/3/2024. Since 1992, this is a point which I'd like to repeat any number of times, but I will say it here, sir. Since 1992, when 5-year bipartite agreements were started, that's when it started. This time, agreement has been signed within 14 months. Earlier, the average delay would be 30 months. We completed it in less than that, half the time. So in respect of the increase in salary and allowances for serving employees of banks, there will be an overall increase of 17% in the salary and allowances of the annual payslip expenses for 2021-22, which will be 12,449 crores for all public sector banks. Out of this, 17% and 3% will be loaded onto the basic pay, and the remaining will be distributed in the form of other allowances. New pay scales will be calculated after merging the DA with the basic pay as on 31/10/2022 and adding thereon a loading factor of 3%. So that's about serving employees. For pensioners, sir, monthly ex gratia has been considered in addition to pension for the pensioners and family pensioners as a one-time measure and will be applicable to the current settlement period itself. Third major thing, sir, there are several other issues, the 12th BPS and residual issues of the 11th BPS, which is old legacy issues. All of them have been handled. The pre-1986 ex gratia to retirees and their families have been increased from 4,946 rupees. They were getting only that. And 2,478 rupees. Ex gratia for retirees, 4,946. To the families, 2,478 have now respectively been increased to 10,000 rupees per month in both the cases. So where you were getting only 2,478, you're getting 10,000. Where you were getting 4,946, you're getting 10,000 per month now. That is for the pre-1986 retirees. Sir, this will benefit 105 retirees who are still living from that time, elderly, super senior citizens, and 1,382 spouses of those people who had served the banks. Total additional cost is 4.73 crores per annum. It is implemented since February 2023. So 100%, second point, so 100% DA neutralization to pre-2002 retirees and ex gratia. Total additional cost is 631 crore per annum. Total beneficiaries will be 1,81,805 members. DA neutralization is being offered. It is implemented since October 2023. Option to resignees, which was earlier not taken up, who were otherwise eligible to join pension scheme. Total additional cost on this ground is 135 crore per annum. This will benefit approximately 3,198 persons. So that's also achieved, sir. So the IBA has done this work, keeping in mind the bank employees, their families, the pensioners, and the retirees. The last point about Mr. Shivadasan's comment is creation and increase of chief general manager positions in nationalized banks. I'm talking about positions, I'm also talking about the jobs, I'm also talking about the vacancies which are getting filled up. We've taken a step which will enable banks to have better control and supervision, improved asset management, and operational efficiency. With this revision, sir, the number of CGM posts in all the 11 nationalized banks has been increased from 80 to 144. It means people are moving up the pyramid. You're filling those positions which are then getting vacated, so more people are coming in. Accordingly, the number of GM posts has also been revised from 440 to 576. The number of DGM posts from 1,320 to 1,728. And the number of AGM posts are from 3,960 to 5,184. So I want to underline the point that a total of 1,832 posts have been created in the positions. Therefore, as a result of these steps, so not only people are being allowed to go up in the ladder, new positions are also being created. Jobs are not being created. Honorable Member Shivadasan, it's being created. And people are being moved upwards as well. Promotional opportunities are increasing in banks as well. So thank you very much, sir. Thank you for giving me this.
Shivadasan has a point. Honorable Finance Minister.
Yes, sir.
Only Shivadasan. Yes. No. Sir, then it will be endless. Point of order, yes.
My question is. One second.
Point of order.
First, I will, sir. My question is: the thousands of persons are working in our banks, say contract workers. So the reservation is not there, and also because of the vacancy, they are working there as contract workers. So government have any plan to fulfill the posts? So creating the jobs in the general manager and this top posts. But
thank you so much.
Thousands of posts are vacant.
Thank you so
and those.
What's the point of order? 1 second, point of order.
Rule 261, sir. If the chairman is of opinion that a word or words has or have been used in debate, which is or defamatory or indecent or unparliamentary or undignified, he may in his discretion order that such word or words be expunged from the proceedings of the council. Sir, I didn't want to interrupt her during her course of speech. It was a good flow. And during her during her reply, she said that Congress Party's 2008 notorious loan waiver. Notorious is an unparliamentary word, sir. Kindly expunge it.
I will look into the matter whether it is unparliamentary or not. Let me again look at it. Honorable Finance Minister, one particular member, Shakti Singh Goyal, had raised one issue,
Yes, sir.
that communications emanating from the Honorable Member of Parliament did not evoke even a response from the concerned institution. Prestige of a member parliament is fundamental to this House. And if a member parliament does not get prompt, adequate response, the dignity of the House is also compromised. I recollect my days in 1990 when I was a junior minister, and the problem was then also the same. Some exemplary initiative will have to be taken by the government to sensitize one and all that if there is no response to a communication of an honorable minister, honorable member of parliament, visitation will be of exemplary consequences. And I'm sure the several directives that are already issued in this remain yet to be complied if I go by what the Honorable Member Shakti Singh Goyal has said. I am sure as a senior minister, you will take steps and accordingly sensitize the administration.
Sure, sir, I'll do that. If you will permit me, sir. Just one more thing which Member Sivadathan said about jobs. It's all right, you're creating GM's post and other things. No, it's not just that. We have created 3.94 lakh of jobs since 2014. 3.94 only in public sector banks. And they are of different cadres and different levels. State Bank of India alone has created 94,000 jobs. 41,000 jobs by Bank of Baroda. 36,000 jobs by Bank of India. 7,000 jobs by Bank of Maharashtra. 54,000 jobs by Canara Bank. I'm rounding off the numbers. 15,000 by Central Bank of India, 21,000 by Indian Bank, 7,000 by Indian Overseas Bank, 55,000 by Punjab National Bank, 8,000 by Punjab and Sindh Bank, 13,000 by UCO Bank, and Union Bank of India has created 38,000. I've rounded up the figures, but it is 3.94 lakh jobs since 2014.
So, Honorable Finance Minister, you are beneficiary. When I reflected on the prestige of members being sustained,
No, sir, I take.
and therefore you need to take proactive steps now in that direction.
Obviously, sir. If the chair.
Zero tolerance with your ministry and sensitize others also.
Sure, sir.
The question is that the Banking Laws Amendment Bill 2024 as passed by Lok Sabha